Hello, everyone. Hi, hi, hi. Trust you are good. Welcome to day 33 of 90 Days of Money Lending Mastery. And this is live section. I can't remember what number we are at the live section, but I wasn't able to go live last week for unforeseen circumstances. So we are here right now. Let's get right at it. Trust you guys are good. My name is Precious Toju, aka the Structure Lady, aka Queen of Debt Recovery. I'm a business and debt recovery lawyer and credit risk coach. I help money lenders, finance, and credit providers recover debts faster, reduce the risk of bad loans, and build a legally protected and profitable money lending business. So, this is another live section. I call it live chat with Lawyer Precious or Ask Lawyer, and I come live every Friday for us to discuss one or two things. So, this today's live section, I'm discussing a very, very important topic, and I'll be out here as soon as possible. This is one of the most important topic for you as a money lender, as a credit or finance provider. Very, very, very important, and because this is the basis of this is actually the basis of loan itself. That's one. Secondly, your debt recovery, your ability to recover debts faster and better depends on what I'm about to discuss or what we're about to look at today. So, what exactly is the topic? It's five things to look out for before you approve any loan application. Underline the word any loan application, whether it is a small loan, it is a petty loan, it is a consumable loan, it is a business loan, whatever loan it is that you are giving out, as long as it is you're giving out money, a small amount of money for a larger for a larger sum. So what I mean by that is you give out 10,000 naira and you are going to get back, let's say 15,000 naira. Let's assume that your interest rate is 50%, right? Because 50% of 10,000 naira, it's about that's 5,000. So you give out 10,000 naira collect back to collect back uh, 15,000 naira. Now that means that you have given out a loan, right? So as long as you're giving out loan and you are particular about your interest rate, you're particular about, okay, when I'm getting this money, I have to get it back with my interest rates. Now these are the things that you must look out for before you approve any loan application. So whether the person applied for loan from you digitally or manually, it does not matter. As long as it is a loan that you're going to give out, these are the five things that you must look out for. Number one, you need to legally identify your loan applicant, your prospect borrower. What do I mean by this? What identify, you need to know who is applying for loan, because when it is time to collect the money, you are not going to be collecting the money from a ghost. So whether it's an individual person that is applying or an individual applying as a business loan, you need to legally identify the person. So what do I mean by legally identify the person? Let's start with an individual. An individual applies for a loan. A lot of people just say, write your name. You need, number one thing you need to make sure is the name that the person is writing for you is the same, is the person's number one legal name. So what do I mean by legal name? The name that the person is officially known for. And that is simply the name on the person's ID card. And when I say ID card, I don't mean work ID card. I mean valid identification card like international passport, driver's license, permanent voters card, even birth certificates, even though it is not a means like that, but it is also because the birth certificate also BS the exact name of the person. So that is for an individual. That's one way, because there are different ways, right? But that's one way to identify an individual loan applicant. Now, an individual loan applicant on behalf of a company, you will not just identify the loan applicant, you also identify the beneficiary of that loan, which is the company. So first thing first, is the company registered? How do you know? You need to conduct a search at the Corporate Affairs Commission's portal. Now, you could conduct the search generally, and you could conduct the search and go deeper. Generally, I mean you can just go to the public search portal and just type in the name, and it will just come out. But as a disciplined and a proactive money lender, you won't just stop at that. You will go and do a further search. Now, this is a paid search with CAC that will now give you the details of this company that is applying, so that you will see who are the directors, who are the people and the brain and the humans behind. So that's what I mean by, identify your loan applicants legally. So legally identify your loan applicant. That's the very first thing that you are to look out for. Is this person a valid person in law? Number two, is this person, can I hold this person? Am I able to identify who this person is or who this company is? Now, the next thing that you're supposed to look out for when, when you want to approve a loan application is, what is the source of repayment? And this is very important for you if you give what is called consumable loan. If you're somebody that give loan for somebody to quickly buy something, pay rent, pay for hospital bill, or quickly, consumable loans, people use it for shopping, all this pay small, where somebody buys a phone, or somebody buys a gadget from a seller, and is paying small through you and all of that. Now, you need to be sure that the person has a source of repayment, and it also goes down to a business loan. But you see, the consumable loans are more of a higher risk, right? Because it is a loan that is given for immediate consumption. And a lot of lenders make this mistake, and once they just check one or two things, they check the name, identification, or I work here, they're fine. But that's not enough reason. It is not a payday loan. So that loan cannot be tied to the person's salary. You need to be sure that the person that is applying for loan from you actually has the capacity to pay. What is the source? And that brings us down to financial capacity. The source of repayment does not automatically mean the person has financial capacity. So let me give you an illustration. So let's say you're giving out a payday loan, and the person's repayment is tied to the person's salary. So there is a source of repayment, which is the number two we just talked about, right? There is a source of repayment. Now, you also would check financial capacity, which goes hand in hand, but I decided to differentiate it. What do I mean? Now, the person has a source. However, somebody is earning 250,000 naira. That is a source of repayment. The person has come to you to borrow a loan of 500,000 naira, right? And you are based, and you're saying the person should pay you 150 per month, which is not a very good idea, not very realistic, because if I'm earning 250,000 and to pay you 150,000 naira per month, it's going to be difficult on me because I have other basic needs aside loan. But let's just take it like that. Now, you have identified a source of repayment, which is the 250,000 naira salary. But have you been able to identify financial capacity? So have you put into consideration things like the basic need of the person, things like, does this person have other means of income, just in case the employer sacks the person? Because for the mere fact that you give loan to somebody does not mean that loan would guarantee the person's salary. No, right? So what if this person loses his job tomorrow? What other financial capacity does he have to pay you back your money? If this person is owing other lenders, And at the end of the month, he is to pay 500,000 naira from a 250,000 naira salary. What is the assurance that you will have your money at the end of the month? So you can see that identifying a source of repayment and also being able to identify capacity, financial capacity to pay, are two different things. So that is the third thing. You need to look at beyond source of repayment, the person's capacity, financial capacity to pay. Now, the fourth thing you should look out for is what I call character and track record. So I did a video and I posted it on Instagram, and I said some people, when you want to give them loan, they are beginning to adjust your terms and conditions. Now that goes a long way to show a lot of things. So I'll give another illustration. I was called into a debt recovery matter from a microfinance bank, and during the meeting, one of the loan officer was saying that right from the day of application and verification stage, the woman who was owing them had been very arrogant, had been so proud, the way she was even looking at them in a condescending manner, more like, do you know who I am? Is it because I'm coming to apply for loan from you and all of that? So this loan officer said he saw this character, this bad character in the woman, and he was actually telling his HOD that he doesn't think they should approve this loan, even though the woman has ticked almost all the boxes, and they still went ahead to approve the loan. At the end of the day, it was difficult for them to recover the loan, in plus the woman's character. So while credit history is good, credit report is also very, very good. It's very, very important for you to look at the character of the person. Credit report is part of the character. Credit analysis is part of the character. Your credit score, your borrower's credit score is part of the character. Plus demeanor, conduct, behavior. You would know if you're paying attention. You would know if the person is even reading the T's and C's that you're giving to the person. You would know if the person feels that your process is too cumbersome. Now, I'm not asking you to make your process very cumbersome, but I'm just saying that basic process they cannot follow. Now they know somebody in the company that is higher than your loan officer, and then they now want to go through the person to bend the hand of the person. Those are people with bad character, and you're going to have issues when they are about to pay you. So the fourth thing you should look out for is character and credit track record of your borrower. And lastly, documentation and security. You must document your loan transaction, whether you want to do it digitally, you want to do it manually, it does not matter. You want to make it hybrid, you want to use both digital and both manual, it is fine. But it is very, very important that you document your loan transaction and then secure your loan transaction. Depending on the type of loan product that you're offering, you should be able to secure your loan transaction. Secure them through surety, through collateral, through guarantors. Whatever it is, you don't just give loan to somebody. You must ensure that while you are pursuing your interest rate, the other person too, is also making effort to pay you, because he or she knows that there is something at stake. Very, very, very important. A lot of you don't charge interest. A lot of you don't secure your loan because you charge a very ridiculously high interest rates, because you just feel once the person pays, it covers for every other loss. But have you thought of it, that what if the person does not pay on time, which is most likely the case in most loan transactions, and the time that you're taking to pursue that loan, how much have you invested and how will you get this money back? So 5 things in a wrap, 5 things to look out for before you approve any loan, whether it is a digital loan, whether it is a soft loan, whether it is a personal loan, consumable loan, business loan, student loan, proof of funds, whatever it is. Legal identity of your loan applicant. Who is this person that is really applying for loans? Source of repayment. Does the person have a reasonable, reliable means of repayment? Now, financial capacity. Yes, the person has a means of paying you, but what is the person's capacity. Alternatively, where that source of repayment is no longer, in place. Another one is character and track record. Character and track record. And lastly, documentation. You should be able to document your loan transaction. It is even illegal not to document your loan transaction. So these are the 5 things, there are a lot of them, but these are the top 5 things you should look out for, whether you are approving a small loan, a medium loan, or a large amount, a large loan sum. It does not matter, as long as you've given as long as you've given out a loan and you're charging an interest on it, and you are going to be, you're going to want the person to pay you at the end of the day, you must look out for these things. Now, the step-by-step guide on how to actually go about these things, identifying your loan applicant, identifying major source of repayment, identifying cash flow and financial capacity, being able to understand the person's character, trace the credit history and track record, documentation, security, loan products, how to design your loan products, how to design your lending process, how to put proactive credit risk management into play, how to build systems and structures for a productive debt recovery. All of these things and so much more is what you're going to learn in Mastering the Business of Money Lending Bootcamp. Batch 8 registration is ongoing, and we're currently on early bird registration. Today is 30th of March 2026. By 13th of March 2026. By 30th of March 2026, the early bird discount would have disappeared and you would have to pay the regular fee. Now, the link is beneath this video. Click the link to read, to understand all the things that you're going to be learning in the Money Lending Bootcamp, and register immediately. And I will see you in the next live section. If you have any question whatsoever based on what we have discussed in this live section, please feel free to drop it in the comment section and I will respond as soon as possible. Thank you once again. I remain Precious Tuju, aka the Structure Lady and Queen of Debt Recovery, a debt recovery lawyer and credit risk coach. I am championing productive legal and debt solutions in the money lending ecosystem, and I need you to join me as I make an impact and bring in my experience and special expertise in the money lending industry. I hope to see you in the next live section. Please do share this video, and God bless you. Cheers to your profitable money lending business, and remember to always stay proactive, productive, and profitable. Bye-bye.